Hello everyone, welcome to the channel where we provide that financial education and information for you. Now in today's video, we're going to answer the question, how are insurance company able to give you a guaranteed rate? How are they able to give you a guaranteed rate when the banks can't even guarantee 1%? Well, I'm glad you asked. So we're going to talk about that. So the reason why insurance companies are able to do that is basically because they are some of the best money managers around. They're better than banks, right? They have been around and for hundreds of years. Many insurance companies, some of the top ones, have been around for over a century, and they've faced all type of things, all type of world wars. They've been through depressions, recessions. They've seen it all and faced it all and overcome it and came through with flying colors. So while some banks actually get closed down when we face recessions and hard economic times. So insurance companies are great at managing money and they're very safe. So we're going to kind of break down how they do that. All right. So 50 to 75% of their money is in bonds. And bonds are guaranteed, right? So they have a good chunk of it in bonds. Safe investment, guaranteed investment. So they dump a lot of money in bonds. So pretty safe. It's not in the market, right? Next is mortgages. And I should write this the other way. Make more sense this way. Bonds is 50 to 75%, depending on company, right? And then the next is mortgages. Just like banks do lending for mortgages, they do lending 8 to 15% generally. Just like banks do lending for mortgages, they do lending for mortgages, but they are a lot more conservative. Where banks sometimes will lend 75% LTV, 80% LTV, 85%. I've even seen banks lend 90% LTV. At that high rate, it's a lot of skin in the game. So if the deal goes bad, they've got a lot invested in the deal. Insurance companies typically don't go more than 50%, typically. So even if the deal goes bad, they can recover and resell and still make out, right? So, somebody would definitely, if the project was $1 billion and they put $500 million in it, they should be able to sell, whatever, for at least what they put in. They should be able to sell that property for what they put in. So they don't go too much in it, too much skin in the game. Most of the time up to 50%, so they minimize their risk. They're very conservative, very safe, okay? Next, what they do, policy loans. Policy loans is usually 7 to 10%. So that's why the insurance company doesn't have a problem with lending you money, because you as the policy owner will actually is responsible for 7 to 10% of their fund, right? Because you're borrowing from them and you're paying them back. They don't stress you for when you pay back, but you pay back the loan. So policy loans, 7 to 10%. So that's why you don't need any credit. You don't need to apply for anything or anything like that. As long as you have the cash value to back the money you're borrowing, they will lend it to you in a heartbeat, all right? And they're going to get that interest back. So 7 to 10% of it is from policy loans. Next, businesses. Businesses. Generally speaking, 5 to 10%. They invest in business, cash flow in business. So instead of going to start a business that's on the books is already cash flowing, just like hedge funds have these strategies where they have their money, they have their hedge fund money, and they go buy a business. And they're getting the cash flow from the business. They don't even need to operate the business. The business is already in place, running functionally, operating. They're just going to buy it so they can get the cash flow from the business. And that's just automatic money coming in, right? So they buy cash flow in businesses. Next, stocks. There's other things too, but these are the major ones. Stocks, usually 3 to 10%. So they invest in the market, but they're very conservative, 3 to 10%. So, depending on company and how their financial, management is, some may be a little, little more aggressive than others. Like 10% is aggressive for an insurance company, which is the most they'll go up to. So, but yeah, that's more aggressive. But generally speaking, 3 to 10%. So, but it's still compared to the whole 100%. That's not a lot invested in the market. But when they do invest in the market, they know what they're doing. So again, insurance companies are very good at managing money. So they're conservative. They know how to manage their risk. They put most of their money into stuff that's more secured. They have good leverage. They're conservative in terms of skin in the game. So therefore, they can guarantee you money because these money that's coming into them is almost guaranteed, right? Almost guaranteed. This one's guaranteed. This one, if anything goes wrong, they know how to recoup the money there. Here, policy loans, they're going to get that back because even if you don't pay it back, they take it from your death benefit. Businesses, that's cash flow in business. That's already positive cash flow. That's guaranteed money without even thinking about it coming in. And they're pretty good at the stocks that they do invest in. They know how to do it. And as you can see, it's very conservative. It's not a lot anyway. So hope that answers your question. How insurance company are able to pay you a guaranteed 4% or whatever their rate is without even thinking about it, when a bank can't even guarantee you 1%. Insurance companies are great money managers. They know how to get through tough times. They know how to minimize their risk and maximize their funds, the surety of getting funds. They know how to maximize that. So that's why they're able to guarantee you a 4% or a 4.5% or 3% in this low interest rate environment. So hope that answers your question. If you have any further questions, please leave a comment, leave your question there. Even if you want me to make a video about something else, leave it there and I will make that video for you. Also, if you haven't already done so, subscribe to the channel and hit the notification bell so whenever we release a video, you're one of the first to be notified. Until next time, I'll see you soon.